All right. So initially this morning, again, we kind of came into this. There were some buy signals from yesterday. We were just kind of puttering around. And this is SPX. We'll look at ES2. We got in. It popped up. It came against us, but we didn't get any sell signals here on the 5-minute chart. And then ultimately, we rallied and then we hit our 40% target, right, on the spread. Directionally, if we were long the spiders, which we did, and long calls, I mean, it's more difficult because the 40% on the spread can happen even if the market is trading sideways. It just takes longer. So if you're doing directionally, then I would just kind of, you can write it out until you see kind of a red dot, different stuff like that. But now the thing that's coming up is, remember what we talk about is once, we're not quite there though. Once you kind of get 0.75% away from the 21 EMA, okay, that's another target you could use, because at that point, it sometimes does, but oftentimes it's not going to explode, keep going. And of course, there's the 5 EMA right there, right? So the trade here to look at is, do we roll back over here to 36.62? Okay, and is that worth a trade? Now, normally I would say this is kind of what we did yesterday. The Powell speaking thing makes things a little weird. Man, I just lost my voice. And we actually do need to document a lot of stuff as well. But that is something, that we'd look at as well. Yeah, so the other thing I want to do here is I'm going to tweak some of the trend rotation and then SD setups, and then I can share those with you as well. So this is the squeeze rotation. I'm just playing around here, like that's what candlesticks look like. All that kind of fun stuff. And then, so that one was SD, or is regular. Yeah, and this is the S&Ps. So you can see that, okay, so S&P regular, so if you were long the S&Ps here and you started seeing these red dots, that's just a sign that things are starting to roll over. And on a directional trade, yes, I would get in. I would get in on something like that. So, why aren't we seeing the dots here? Well, we're not seeing the dots on SD because I've got it set at 2 standard deviations, and the moves here are so quiet, we're not getting 2 standard deviation moves. And I think that's important. So if we look at, what's a 2 standard deviation move, that's minus 2 standard deviation, we do get dots, okay? And so that's one thing is on the SD, you will get less dots that way. So again, I'll talk about all the differences of all that. On the 1 minute, you do get more 2 standard deviation moves, and you can kind of see this nice kind of a rollover here. So, again, directionally, it would make sense that, you kind of take your gains or at least trail up your stop and all that kind of fun stuff. And then, yeah, so we are kind of coming up to this 5 EMA. So what I'm also looking for here too, for a trade is, remember, the biggest things I'm looking for in terms of a setup, all right, is that if we are pushing away, so what would I want to see right now to go short? What do you guys think? Yeah, well, no, not just the red arrow. It's the distance away from the 21. So I want to see is that we're at least 0.75% away from this 21 EMA. Okay, that's why this is important. That's first. Then I want to see dots and arrows. Okay, but if we go here and you get dots and arrows, like right here, that's like a fart. That's the only best way I can, it's the best way I can explain that. We don't trade farts. We trade movements. So that's why I've got that threshold here where I do want to see it at least get that far away, or I'm not interested in it, frankly. So, but if we could get up into this zone, that would be 0.75%, and then I would be looking for something like that. And then, yeah, so then the next question is, well, what about the S&Ps? Because the S&Ps, we're actually 0.8% away. And so what I do is when I'm trading the SPX, I use the SPX. I've just found that the SPX moving averages, they respect them pretty well, and that just keeps it simple. So does that make sense? So right now we're rolling, we're rolling over here a little bit, but we didn't get far enough away to make it interesting for a trade. Based on the rules that I use. So here, we're falling, that's I think that was 1% away. Then yeah, let's start seeing if we get some rotations up, right? Because we would look for a move back into that, and that's what happened. And so that's where we are. But again, on the SPX. So if we go to the SPX, and we're looking at this, it's kind of like, okay, I'm trying to think of, yeah, so yesterday we gapped up into the 5 EMA, and we did get that 0.75%, and we sold call credit spreads, and that worked great. But we've been in a pretty steep, one thing to remember here too is we've been in a pretty steep downtrend. And so that's why I also like to look, the markets don't go up or down forever. So if we look at structurally what's happening on the 30-minute chart, it's pretty bullish, down to this level. I don't, I think it's going to be hard for us to get through 3,700 today. We'll see. But the main point of all this is that if there's nothing, so we're gonna write down some rules that I like to look for. And so the nice thing is like, okay, so why not? I think we're going to go to 3,700 here. So why don't I buy calls here? Well, because it's not a high probability setup. Yeah, we may go there. And honestly, if someone pointed a gun at my head and said you need to pick a direction here, I think we're going to 3,700. Right now. Back in the good old days, I probably would have gone long here. But the point here is that I'm no longer interested in what I would simply call like, I think that looks good. I want to say like, okay, either A, the initial move, we got that initial move, we got our target. And then my next trade is either we get so far away from the 21 EMA that I'm willing to short back to it, okay? Or we come back down to the 21 EMA, and that's the other setup that I do. That's I just forgot the name. There's the snap back, and then whatever the other one was I called. So the two trades I'm looking for right now is either A, in fact, let's just capture this. So and this is what I want to start doing, because I think this is the easiest way to learn this stuff too, is we just document it as we go. Blah, 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 blah. Okay. Nice initial trade where we sold the PCS and it hit our profit target. Now, what do we do? For the next trade, I want to see that we are either 0.75% away from the 21 EMA 30-minute, and then I would look for red dots to sell a call credit spread, or we come back to the 21 EMA and set up green dots and buy arrows for a for a move higher off that level. So that's the only two trades I'm interested in right now. Let me make sure I got this right. I want to see 0.7, then I would look for red dots, red arrows to sell a call credit spread, or we come back to the 20 and set up green dots and buy arrows for a move higher off. Okay, so that's the only trade I'm interested in right now. If those two things don't happen, I will not do another directional trade like we did. Okay, there's different trades later in the day. Does that make sense? This saves me a lot of time. Yeah, but remember, we're not trading the ES. We're trading the SPX. That's a good question. Note, for MA, I'm looking at SPX, not ES. Yeah. So what about theta decay? Yes. I will do theta decay trades if these conditions are hit. Does that make sense? So I'll do a call credit spread if conditions 1 are hit, and I'll do a put credit spread as conditions 2 is hit. I don't give a crap what happens outside of that. Does that make sense? So so um, the 21 EMA 30-minute on the 5-minute or the 1-minute. So it's the exact same. So if you're looking at the 21 EMA on the 30-minute and you've got that on both charts, the percentage will be the same. So the reason I'm getting this granular is these are the same rules I shared with James, and I saw how consistent he was. And it means that he missed a lot of trades. Okay. And since I've been doing this, it means that I miss a lot of trades. And I got to tell you what, I could care less because it's like nearly every day I'm hitting my cash goals by essentially being a lot pickier. Yeah, no, Todd just hit it on the head. It's getting cured of FOMO. And I think that's really important because in trading, look, there's always going to be something to do, right? We just made our money, and guess what we're doing now? We're keeping it. We're not like, oh, let's do another trade here. Yeah, I'll do another trade if the conditions that we just talked about establish themselves. Otherwise, the market is going to move without me, and I don't care. If this is the only trade we did today, and it was kind of, I wouldn't call it low stress, but it wasn't high stress, and we walk away with money in our pocket, who cares what else happens? So anyway, that's what I'm trying to, and this is what I've had to learn too, and that's what I'm trying to instill, is that if you're compounding your trading account, okay, if you're compounding your wealth, let's say at 1% a day, okay, that is 1,200% a year. If you can get that to say 2% a day, all of a sudden it's insanity. Okay, 3% a day. But what that means is don't piss away your capital on bullshit trades. As traders, we're like, oh, we got to trade, we got to trade. No. You got to think of it, instead of being a trader, is how am I compounding my wealth? And if I want to compound it at 1% a day or 2% a day, so on the what was the so on the 50K account, it was basically 2%. So $1,000, 2%. So 2% a day, it adds up. What I do is I like to wire the funds out because I do psychologically, I do get tripped up on what I call house profits. So if you start here and all of a sudden your account's here, getting a little cocky because you got some cushion, I have a problem with that. So the answer to that is you have your whatever your base account is, that's your business, and then any gains over that at the end of the week, you wire them out. Sometimes I wire it out every day. Or let's say you have 50K and your goal is to get to 100K, still wire out. But you can just say, oh, you wire out half your profits until you get to 100K. So that's the idea here. This is a business. This is not, oh, what's the next thing that the market's going to do? We gotta participate in it. No. And I'm saying that voice because that used to be me too. It's like, oh, all right, let's catch this move here. Who cares? So anyway, hopefully I'm getting that point across. Yeah. Yeah, you can't kiss all the babies. So right now, I would be normally, if we were if when we were up here, we were at least 0.75% away from the moving average, yeah, I'd be selling call credit spreads. And look, I'm looking at this going like, damn, if we had sold call credit spreads, we'd be making some nice money here. But the conditions weren't met. This gets so much easier. It's almost like dealing with the people in your life becomes so much easier when you establish clear boundaries. All of a sudden, everything's easy. Everybody understands where you're coming from. It's the same thing in trading. Establish the boundaries for your trading plan. Now, this is going to be tricky here is if we start, if we're just going to be trending higher all day and we can't even pull back. So typically in a day like this, if we are going to have a strong trending up day, typically what will happen is that we will kind of come back and kind of test this key level. It's possible if for some reason today's going to be a strong up day, we just kind of keep going up. And it's like, oh, we didn't get the pullback. What do we do? Well, we're not going to chase it. Do I believe this is bullish? Yes. So I'd love, if we can pull back here, I'd love to do that and sell another put credit spread. Now, I could sell a put credit spread here, okay, and just say, this is where it gets, I would say tricky, is that we could sell a put credit spread here and just say, well, geez, if it comes down here, that's fine. You know, I'm willing to hold on to it. That to me, that just gets a little dangerous. So just have a trading plan and follow the plan, even if it means you miss out on some stuff. If you change this to candles, it shouldn't, somebody said if they changed it to candles and then the colors went away. I just changed it right here. So, you know, whether I have bars, chart type, bars. So I go back and forth on which one I like better. And this market today is pretty darn strong, but we are coming up against 3,700 here too. All right, let's take a pause here. I do want to kind of step back here and just look at the markets, because we know what the conditions are for a trade. And, you know, it looks like it's going to be big short covering all day. You have Google going up, Tesla, you know, the VIX is coming down, the dollar's coming down. But, you know, if anything for today, the idea here that, let me change this to the SPX. You know, the idea is that we don't want to just hop in the market to be in the market. We want to wait for a high probability setup according to the parameters that we've discussed in, you know, order to do that. And so, you know, the two high probability setups right now are at levels where we are not, you know, we're not there. So either, you know, if we got to 3,700, that would typically, you know, that I'm just eyeballing it, but that should line up where we're at least 0.75% away from the 21 EMA on the 30-minute chart, right? Plus, you know, that's a nice resistance level. So I'm anticipating that we may have the opportunity to sell a call credit spread against that at some point today. The other trade is that we do kind of ease back down into, you know, right now it's about 36.65, give or take a point. And then, you know, we start to see some turns, and then we could sell a put credit spread there. So essentially, I'm interested in either 3,700 for a call credit spread with, you know, the conditions that we talk about, or 36.65 for a put credit spread with the conditions that we talk about. And so that's what we are now, is that I'll do a trade here or here. I'm not doing a trade right here. If it was later in the day, if there was 30 minutes left, you know, the idea might be, well, geez, what if we bought a straddle here? And if we go up to here or down to here, we could make money that way. And the answer is yes, I actually like the idea. But right now the straddles are pretty pricey. You know, we could say like, oh, let's buy a straddle. What does a straddle look like here? And if we come over here and we look at the SPX, yeah, so you know, and we'll talk about the 5-minute on the 8 EMA is a good one too. That's I would just call that kind of a micro trend. So the 15-minute is a little bit bigger of a magnet. But yeah, you're absolutely right. So let's just say that we're in a pausing point and we think we're going to go, you know, either up to 3,700, which is 15 points, or down to 36.65, which is 20 points, right? Like one of those, I'm, you know, 98% confident that one of those levels is going to get tested today. Just because of the nature of the market. So it's like, okay, well, how about we just buy the 36.80 straddle? Okay, well, geez, it is $31. So, you know, the price of the straddle actually is $31. And, you know, we're looking for the market to either go $15 up to sell a call credit spread or $20 down to sell a put credit spread. So if we bought the straddle, we were basically just asking to lose money. Now we could sell the straddle, which I actually like that idea. But then you got to do it naked. You know, if you do it naked, right? Okay, then you got to do it wide. So it just opens up another thing. So so when you sell what's called, we could sell this as what's called an iron fly, which is essentially you're selling a naked straddle with protection. It's like an at the money iron condor. I mean, there's different names for it. So 3680, 3680. Okay, and you're going to see this and say, well, geez, we should do it. I'm going to tell you why we're not. And then let's just do $20 wide. 3680, 3660. Okay, I actually like this trade. And if you look at this, it's $20 wide and you get a $16 credit, right? So, geez, we're only risking, on a one lot trade, we're risking $410 to make $1,590. Well, the only way we're going to make that $1,590 is if we close at 3680. Okay, but here's the reason I won't do the trade. When we sell the spread directionally, even though it's in the money, once we start to go in that direction, the premium decay works in our favor. But if we do it this way, in this case, if it starts to move up, the premium decay that we're getting on the put credit spread is absolutely set off by the gains, the money that we're losing in the call credit spread. So the point of this is that this doesn't work at this time of day. Now, if it's a 1 p.m. Central, okay, and we got 2 hours left, then yes, this makes sense. So part of this too, and we talked about this on Saturday, is that the only strategies I'm doing the first part of the day are credit spreads. Later in the day, past about 1 o'clock, then I'll start looking at possibly some iron flies, butterflies, et cetera, et cetera. But initially, I'm like, does that make sense? So even though the risk to reward looks great, you can't make any money in it. You got to hold it until 2 o'clock. And between now and 2 o'clock, a lot of things could happen. So the iron fly is basically an at the money. So think of as an iron fly as a strangle with protection, and then an iron condor would be a straddle with protection, and then an iron condor is a strangle with protection. So the iron fly, you're going to sell the same call and the same put, and then the iron condor is you're outside of that. Okay, it's like you're selling strangles, but you're doing it with protection. All right. So, I mean, look, this is a tricky spot here because I think the market's going higher. So part of me is like, geez, we should sell some put credit spreads. But this is where having rules is helpful. What we're doing here is we're trading sideways. We've got a big level up here at 3,700. So we're likely going to test it. And, but again, with the rules that I've been using, it means that I missed some trades, and I've learned to be completely fine with that. So hopefully that makes sense. And look, I'm just trying to be transparent in what I'm doing and what I'm finding working for me. And if I can make my cash goals with as little work as possible and as few trades as possible, I see the advantages of that. Like if I get close to my cash goals of the day, I don't care what else is happening. Oh my God, look at GameStop. Who cares? Oh my God, who cares? My job is not to catch every freaking move in the market. It is to make my daily cash quota and get the hell away, from the market makers. Yeah, so my cash goal every day is 2% to 5% of my NLV. So off of that first trade on the SPX, I'm basically at 2%, almost. So I'm in my cash goal range already. And remember, this was one contract per $10,000 per 10K, and it was 10 wide. So one trade, 40%, using that structure, so on a 50K account, 1% would be $500, right? 2% would be $1,000, et cetera, et cetera. I'm fine making 2% a day. Now, am I not going to do another trade today? This is why I'm so strict. I will do one if it meets the criteria I met. Why do I want to just take a half-ass trade here and risk pissing away the compounding gains that I made? And same thing in my larger account, where again, it's a much larger account, but on a $6 million account, that range, 60K is 1%, and then 5% is 300K. Now, obviously, hey, I'm all about those 300K days. So that's 1% to 5%, but you're pushing it on those days is what I found. Whereas 1% to 2%, you can kind of make on the first trade of the day. Yeah, and just so you guys know too, we are going to trade together the last hour of the day. The last hour of the day is a lot different. You don't want to take a lot of risks the last hour of the day. You want to set up what it's called, asymmetrical risk to reward, where you're not risking a lot, but if it works great. Now, I'm the first one to admit this is the hardest part of the markets for me. I'm super bullish here. I think we're going to keep going higher, but we did not come back to an entry level. So, I'm telling you from experience, this is hard. This is hard. But I'm also telling you from experience that if you have the discipline to follow your plan, your trading goals become easy. Okay. So that's the goal here. So this drives me insane because I'm so bullish here. Give me everything. So hopefully this makes sense. I mean, I think this is a great kind of a learning day because once you get your arms wrapped around the idea that 2% a day, if you can crank out 2% a day and you don't take anything out and you're able to stick with your discipline, that's that's a 20x on your account over the course of a year. I think the biggest challenge there is that, once, if you 10x your account, it's like, oh my God, I got so much cushion. I'm going to take bigger risks. I'm going to throw my discipline out the window. That's the challenge. Okay. So yeah. So look at here. We're 0.75% away. Okay. So we are getting into a zone there. Boom, 0.75%. So now I can start looking for call credit spreads. And it would make sense. I mean, 3,700 is kind of a nice round number. Even if this market's super strong, the odds of us going straight up are low. So let's see if we can kind of get up. So when I see we're 0.75% away, awesome. We're at 36.92. Let's see if we can kind of test this level and get some red dots, and then we can sell a call credit spread. So now then what I'll do is kind of tee it up and say, okay, well, if that's something that we're going to do, and we know that it would be against, about 3,700. And 3,700 right now is slightly out of the money. 36.95 is kind of, so 36.90 is in the money. But we're kind of presuming we're going to get up to 3,700. So let me see what the 3,700, 3,710 is. And what you can do then is, when you can start anticipating the stuff, is you just tee it up, and that way you're not scrambling at the last minute. Henry does this too, where he actually saves orders. I don't do that, which it's smart to do that. Tastyworks, you have this feature where you can just keep repeating it. So there are ways that you can make this easier. So on something like this now, I'm kind of teed up, and I can see that if I did it right now, I would get a 410 credit. Okay. Now I'm not going to do it right now, but it's teed up and it's ready to go. In case you're ready to go, you're ready to do it. Yeah, and if you're going to do ES options, you just change this. I personally don't recommend doing directional futures on this. So I just do that from the experience of it's so much easier with the spreads. But I get it. I mean, look, I trade directional futures. So I get it. And it's, the challenge is on the futures is what's your stop. So what you saw on the SPX spread, we had a 15-point move against us, and it wasn't a big deal. We were down like $1. If you do the futures and you have a 15-point stop, you're likely going to get stopped out. So just kind of a few things like that. But anyway, if you're looking at the options, just remember that the price is going to be different. And so what I would do is then, at the money, then essentially would be like 37.10. And then the credit should be the same, but just remember that it's half it's half the size. So you'll see that it'll still be like 4 points, but the futures, of course, are $50 a point instead of $100 a point. 37.20 and there. So you can see it's about the same, right? So that's what we got. So now what we're doing is that, okay, so we're in our threshold. We're through 0.75. Okay, now we just need some sell signals. So this is the next thing is like, I sure as hell I'm not going to sell this without some sell signals. Okay, so there's a dot on the 1 minute. That's, that's a good initial thing. Do you need both the legs in the money or just a short leg? Now, I just kind of try to get the short leg. So if it's a $10 wide spread, oftentimes, I'll kind of split it. So I think when we did our first call credit spread, SPX was at 36.60, or put credit spread, sorry. And so we did the 36.65, 36.55 put credit spread. So we kind of are right in the middle. It's not super critical. And I've actually even studied where if you do it slightly out of the money, you're going to get that 40% decay faster. But what you're trading for that is you're going to have more heat if it goes against you. So part of the reason for choosing that is that when it goes against you, you're taking less heat. If it's further out of the money, you're going to hit your profit target a lot faster. So there's some times when I will do further out of the money, just depending on a few things, but that's the trade-off. All right, you can see we're getting some red dots here. Let's see what's happening here. We are at that 0.75% zone. So what I'd like to see for an entry, now remember the red dot on the 1 minute is a heads up. What I want to see on the 1 minute would be a red arrow, okay? And that would happen well before anything happened over here. But if we get the red dots and an arrow on the 1 minute, that's at least a sign that it's, rolling over a smidge. Does a $25 wide take less heat? Point wise, you take more heat, but percentage wise, it's about the same. We'll cover it. We'll do a deep dive into all that. I just want to see if this one trade sets up here. Yeah, well, I don't do any trades after about 11:30, so that's an hour away. So it's remember I'm on Central Time, so Central Time is 10:30. Yeah, so if you're doing SPY, again, just bring up the SPY. The SPY and SPX levels are similar. Remember the SPY is just 1/10, so you got the exact same chart set up, right? So if we're going to do this, then you'd look at doing the so a $10 wide SPX is going to be a $1 wide SPY. So you could do the 368, 369. To make 5%. Typically for 5%, 2 to 3 trades are necessary. Yeah. You can do, and I've found that it's you can make money later in the day, but later in the day should not be a make or break, because you don't want to lose the money that you already made. And B, you're kind of looking at things where it's like, okay, I'm doing this butterfly, and if it pins, I'll make some money. If it doesn't, I won't lose a lot. So I would say the last hour should not be the last hour should be the cherry on top. It should not make or break your day. Yeah, exactly, William. Later in the day is when the market makers get happy. All right, we're showing a little bit of, we got a dot here. Again, I'd love to see an arrow here, because that's telling us that we're getting some rotation. Got the dot. Oh, you know what? I'm looking at the slowest one too. And that's the other thing we'll talk about. Yeah, okay. So we're already getting arrows over here. And then let me look at the standard deviation one too. Yeah, so the standard deviation one, you can see, again, they're all similar, just a little slightly different kind of a read. So we did get the arrow here on the 1 minute. Nothing over here on the 5. We did, you know, we did hit our threshold for the EMA, all that kind of fun stuff. Yeah, so that's a good question too. Wouldn't it be safer to do a put credit spread here and that's going with the trend? So a couple ways to look at that. I mean, first, you know, the first part of that answer is yes, but you know, remember, you know, if you look at a daily or a weekly chart, we're in a downtrend, and we've seen these down moves just absolutely fall apart. Yeah, so now it's kind of, and sorry, and I've been talking here is like now, you know, we've already got the signals here, so I kind of missed that. So now a question comes up, it's like, okay, what point is it too late to get in? I definitely would prefer, you know, to get in when we're still at 0.75% away. That gives you a little bit of cushion. So I kind of don't mind getting in on the way, you know, up. Markets here are a little slow. Yeah, they've come down actually pretty good. So we'll see. Maybe I missed that one. And look, it's hard when you're talking and answering questions and trading all at the same time. So sometimes that happens. It's easier if you're just kind of watching. So if you're watching this, then it's like, oh, we got a red arrow. Great, let's sell a call credit spread, and now we're off running. Now at this point, it's kind of like I would just say I missed this trade, and that's fine. It happens, but it's a little trickier, you know, with lots of moving parts and stuff like that. But that being said, it doesn't mean that it's not the end of the world, because we may come right back up here again and get another shot. When we got in this morning, we got in and there were multiple shots to get in. You know, we got in, but it came back down and it hung out below our entry for like 15 minutes. So it could happen here again. But so good lesson here in terms of like, do you scramble and chase it? And the answer is I don't. And it's kind of a weird slow day. It's, you know, we've seen the markets have been kind of moving faster and stuff like that. But let's keep an eye on this. Well, and so it's easier because in the gold room now, what'll happen, whether I'm on the mic or not, I'll just post my entries. And that's easier for me when I'm not. It's honestly, because people sometimes will ask like, oh, when are you gonna be on the mic again? I mean, it's 10 times easier for me if I'm not on the mic, because I can just focus and then I can just post it. But of course, the point of this is to show you guys what to do here, so you know you can also do it on your own. All right, we'll keep an eye on this. Let me bring up this PowerPoint here. All right. All right, let me get my PowerPoint. Was this no. So what I'm going to do here is I'm going to grab from the class, of course, we had a document. And then maybe I'll just do a new one, but let me and so what I'm doing is I'm just grabbing documentation here. Okay, so this is the class document that we already reviewed on Saturday. And then today, it's just going to be adding to it. And then obviously I will upload this. So, of course, you know, if you haven't seen this, the big part of this is why the SPX, why the SPX, all that kind of fun stuff. And then what type of trades to do based on the time of day, in the money and at the money. Credit spreads till 10:30. After 10:30, kind of the same, but also we'll consider out of the money because the theta decay is fast. And then towards the end of the day, you want to be careful with directional risk and do more asymmetrical risk to reward type trades. And then what I want to do is, yeah, so we got all that. Okay. I'm just going to add it, and then I can change it later. Okay. Live trading notes. 9/28, 2022. All right, so we're going to go through this. Now, I'm still watching the chart over here, but the goal now is I want to take a timeout, and we're going to start documenting what happened this morning. And then also kind of building out like, okay, why did we do it this way? Here's the trading plan, all that kind of stuff. While that's happening, I am going to be watching this, all right, and see, we may get another shot as it comes up here and for a call credit spread, or we may come down here and get a shot at a put credit spread. So those are the two things I'm watching. Okay, good question. Why are not dots showing up on SPY? Okay. It's all about the turn threshold. So if you look at this, see how SPX, it's like -60, -40, etc. So then I got to come over here and look at my turn threshold. And I believe it's defaulted to 5. So, we're going to get all of the, we're going to get all of them on SPX if it's defaulted to 5, right? So, I think it's this lower one. And it is not, let's see, yes, no, yes. So this is where it'll start making sense on the standard deviation one. Because like, well, why do we have the standard deviation one? Okay, so my turn threshold is 5. Okay, so that means, what does that mean? That means that, if these levels get below 5 or above 5 and they start to turn, I'm going to get a dot. And if you'll see over here, I mean, yeah, -20, -40, -60, guess what? We're going to get turns all the time. If I go to spiders, these levels might be different just because it's a different contract. Okay, so the level's still -5, but on SPY, since it's 1/10 the size of the SPX, you're seeing that instead of -20, -40, -60, it's -2, -4, -6. Okay, so that was kind of a pain in the ass that I hadn't anticipated initially. So one of the answers to that is this SD, because the SD does measure standard deviation. And it's going to be -1 and -2 on everything, and +1 and +2 on everything, whether it's the spiders or the SPX. So since I do the SPX a lot, I'm comfortable, setting up settings just for the SPX on those other ones. But if we look at the setting here on this, so the SD signals, the turn threshold I have is 2. Okay, so that means if it goes to 2 standard deviations, I will get a dot. And I think that's an appropriate place, 2 standard deviations. We didn't quite, you'll notice here, we didn't quite get to 2, so, maybe it is, maybe 1 point, sometimes I think, right here, you can see we got to 2. So, we're going to get some dots. So, that's kind of a question is, maybe, do we loosen it up a little bit on that? If we go to SPY, you're going to see here that it's kind of the same thing. So we're still close to that -2 standard deviations. So that was the SD was a way to kind of work with that. Now when James used this, so you can see we're getting the red dots here, which line up with we got those turns. And Eric's going to come on. I'm going to have Eric come on today in a little bit, and he'll do a deeper dive into the dots and the arrows and all that kind of stuff. But that's kind of why you'll sometimes see dots on one and not the other. So it depends on where those settings are. So I think, and so the SD one is nice because you've got the same consistency across all of them. Now, as a retired, he's frustrated because he's in school. He's just like, Dad, how can I place trades? So my next challenge is figuring out how I could trade. And at a school, they don't allow phones or electronics. You got to hide it in your backpack or it'll get confiscated. So my next challenge is, because that's what I had to learn how to trade. Is I'm working a full-time job. How do I trade? So I'm trying to figure out some stuff for him, for that as well. All right, so S&Ps here, you can see at the -2 standard deviations, we're getting some action here. We're actually starting to get some pretty decent sell signals on this. And so the idea with this then is like, okay, are we going to be able to grind back down to that 21? So that's kind of the difference between all those. So let me document those first. Squeeze rotation versus rotation trend versus rotation SD. If I can spell. So squeeze rotation, generally smoother. With signals that are a little slower but more consistent. Rotation trend, much faster earlier signals than squeeze rotation. But also more back and forth while in a trade. Rotation SD, faster signals than squeeze rotation and rotation, and smoothed out since it is based on standard deviation versus regular levels. So that's the short version of it. Eric can spend more time addressing it, but so when we were doing this at first is like, well, let's just do one. Here's the squeeze rotation. And then as I thought about it, it's like, well, I kind of like them all and they all kind of serve a purpose. If you only had one, is that fine? Yes. I thought, well, if we're going to, might as well just kind of, do it all. And so we'll kind of just kind of document that and stuff like that too. I'm going to put this back on SPX. Yeah, and let me update the shared links here for the other ones too. Yeah, in fact, let me do this. So this is kind of the updated link for rotation SD. Okay, so what's on here? So we've got the moving averages here. So these are the key intraday moving averages. Okay, so this is and it's labeled. So that's the 15-minute 8 EMA, the 30-minute 21 EMA, and then the 60-minute 50 EMA. Okay, so those are just on this one. Now, technically, I could take this one off. and probably, because it's right here too. So this is the daily 5 EMA, daily 8 EMA, and then daily 21 EMA. So we're 4.6% away from the daily 21 EMA. I mean, that's pretty far. So that's the idea here, where we could kind of snap back. This, of course, is, those are the Keltner channels. So, and then also it has this utility label, the tick. So if it's positive, it's green. If it's negative, it's red. All that kind of fun stuff. So let me make sure I've got that saved. All right. This is the updated rotation SD, rotation SD 3 screens. Where'd it go? It didn't save. Okay, let's try it again. Oh, there it is. Share. All right, so there's that. And then let me do, and this is the same, did I get this one? Tick, VIX, put call, yes. Yeah, and so the main difference here, of course, we got the regular rotation, versus that other one. Rotation regular screen. And oops, that's the same link. That would be a fail. Rotation regular screen. Okay, so there's those. All right, and we're just kind of hanging out here, and there is a point where it makes sense to go do yoga or work out and stuff like that too. So let's do this. The first thing I want to do is I want to document the trade that we did this morning, and then I'll have Eric come on, and we'll spend some more time kind of going over some of the clarifications and stuff like that too. But I always find that this is super helpful. And then I'm still watching the markets here. We're starting to slow down, so there's, I do like that initial opening trade. All right, so this was yesterday. So I want to add this on here because this is a little bit more typical than what we saw this morning. So yesterday we gapped up. We got that 1% away. We got the dots on the 1 minute here, right? And then we got a dot over here, and we sold the call credit spread, and then we got our 40% profit hit here, and then we came down to this level, which is what we were looking for this morning. We just haven't gotten it yet. And then we got our initial arrow here, and then you can see we got an arrow here. We sold our put credit spread, and we started to rally, and then we soon got our 40% credit. So that was back to back yesterday. And so let me, I'm going to start off with this. This is kind of a typical day. I mean, this is Monday's trades. At point number 1, hit at point number 2. Scrunch this up a little bit here. At point number 3, point number 4. All right, that's Monday's trades, just so you guys can kind of see. And again, we'll get into more specifics here. And then for today, all right, so this morning, stocks were slightly higher. We're slightly higher. Let's see, and we were looking for a pullback to the 21 EMA. Right. I guess I should do that too, huh? That's the ES. Oops. To look at the ES, since it has the overnight action. After the first hour, I've found that the SPX respects its moving averages better. So just kind of a cash versus futures. Stocks just kind of hanging out. I'm keeping an eye on those if we get another signal that we can take. And then, but let's get this one trade that we did this morning documented. And I'm trying to remember now. It's like, oh yeah, this is okay. This is what trend rotation looks like in terms of arrows and dots. And then we'll document. And where this gets fun for me is the actual execution. You know, this is part of this is going like, okay, you know, what does this chart look like? And what does this chart look like? And what does this one look like? And then it's like, okay, great. Now, you know, what do we watch? And why do we do the trades, you know, that we do? And this is what trend rotation SD looks like. This one is usually the cleanest because of the standard deviation feature that is incorporated into the tool. So I will, you know, and you know, it's the tricky thing is kind of like, okay, well, geez, you know, exactly which one do I watch? If you're just gonna pick one, you know, the thing about it is they're not that much different. So we'll go through that because you know the idea with this is that you don't have a ton of stuff to look at, but just keep in mind it's not like it's not life and death. Just, it turns out that the histogram is a little smoother. The other one's a little faster, and 6 of one, half a dozen of the other. So part of it will resonate based on kind of like your own, are you directional trading or are you spread trading? That's going to be probably the biggest factor. Okay. When the SPX was at 3660, we sold an in the money put credit spread. Sold the 3665 put, and then we bought 3655 put for a net credit of $4.55. Why slightly in the money? I'm going to elaborate on this, but it's like when you start off slightly in the money and it goes against you 15 or 20 SPX points, you will only be down around $1 to $1.50 before 10 a.m. Central. Due to how premium works. However, once price gets above your sold strike, premium decay works fastest in your favor. The structure allows you favorable price action when it is going against you, and favorable price action when it is going in your favor. I cannot emphasize this enough. This is the aha moment when this all hit me. It allows you to trade, hint, you can trade bigger size with less risk and frustration and uncertainty. For this trade, I did one contract for every 10K in this account. Okay. Yeah, so remember too, and let's review the trades, right? So what are the two trades? I'm going to bring these up here. Where are they? There we go. Rollover trades, snap trades. Okay, so let's bring these over. I'm just going to copy them and just bring them down here so they're front and center. Okay, so let's review this real quick. So it's all about flowing with the tide. Two main types of trades. Snap trades, you get too far from the moving average and it snaps back. Rollover trades, after snapping back, it rolls back over to the direction of its prior move. All right, so if we look at it from that, so the idea here is like, here in this particular case, we were far away, from that 21 EMA. We were certainly, when we were down here, met the threshold of 0.75%. We got the buy signals. We sold a put credit spread. This wasn't today's trade, by the way. And then we got the move back to the 21. Okay, that's what we're looking for in the snapback trade. In the rollover trade, yeah, so snapback. So the rollover trade is, this is kind of what we did yesterday, where we had a snapback trade. Here is the snapback trade, and then this was the rollover trade. In fact, that would probably be good to add on there. Rollover trade is probably not the best name, but first trade was snapback. Second trade was rollover. Honestly, that's probably a bad name. What's a better, because rollover kind of sounds like snapback. So let's think of a better name. What's a good name for, we've snapped back to the moving average, push off maybe? Rebound, continuation. Yeah, continuation makes better. That sounds better. Rollover made sense. Snapback trade, second trade was continuation trade. Good teamwork or reversal. Just whatever makes sense to you is the idea. So, you know, the name, I try to name it in a way that just, it makes sense. Snapback to me makes a lot of sense. That rollover wasn't quite doing it. I mean, I guess rollover makes sense if you're rallying to the 21 and then you roll over and die.